As I spelled out to you this morning, S&P respects decision point 2 like no other instrument I had ever seen. This is where sellers stepped in from on Friday. We came to the markets and what did I say this morning? Ouch! Ultimate torture. We can't short S&P near here, and buyers already stepped in with vengeance because this is the end of the minor bearish trend. We knew this was the key point to find out if buyers mean serious meaning. Sellers stepped in, were short on S&P 4 points. Oil reminded you, respect the end of the major bullish trend. Do not ever get tempted to buy near. This is my short on oil, currently at reversal zone. Adore it as your target. Remember what happened reversal zone on hourly. This is a counter trend trade. Major trend is bullish, but this selling pressure is completely expected. If you know Alpha Wave Trader method, you are looking to buy around 52. You would never buy into this level. This is how magnificent Fibonacci levels are. This is picture perfect confirmation. Respect and adore the price. Know what not to enter into. We're in 2 trades. Collapse continues. Move your stop outside of break-even on oil 53.07. Price blasting through 52.68. I'm going into a larger time frame expansion. Happy Monday, everybody. Magic happens if you respect the price. Where is S&P? S&P struggling at decision point 2, 4 points later. If S&P blasting through reversal zone, we're going into a larger wave expansion. Is that clear? 2 drastically different charts reminding you, no reversal zone where oil is finding a massive pause. Will the buyers step in with vengeance? Every level is crucial Fibonacci level. Exact same rule I use on 1 minute chart is exact same rule I use to short oil monthly. Clear? Short on oil from 106 reached reversal zone. Short on oil on very small time frame reached reversal zone. Formula remains the same. Doesn't matter what you trade. Only you know what's appropriate for you and your account size. I see that buyers picking up this theme on oil. Keep an eye on S&P. Trail on S&P 20.49 1/4. So both instruments at crucial level, as I constantly spell out, adore and respect S&P at decision point 2. Oil, not surprising, struggling immensely at reversal zone. Crucial targets on both instruments had been reached. Monitoring for potential reversal trades. Expected, as I spelled out. Major trend on oil remains bullish. Major trend on S&P remains bullish. Know your levels, know when to move stop to break even, and where to expect reversals. 4 points S&P, 30 ticks on oil. Clear? So let's see if we can catch reversal right. We are out of oil and we are out of S&P. Crucial Fibonacci levels had been reached, oil reversed from reversal zone, and S&P found buyers at decision point 2. Crucial target, third trade of the morning on S&P. Remember, S&P adores decision point 2 like no other instrument. Another 2 points. Pretty please move your stop to break even. You're witnessing decision point 2 on my beautiful chart, yes? Second time around, S&P reminding you, price is magic if you play by the rules. Remember what I said? With Alpha Wave Trader method, you trade my strategy, respecting decision point 2 on S&P. Students will tell you your success rate is above 90%. S&P respects decision point 2 like no other instrument I had ever seen. Second trade, decision point 2 to the upside. Price respecting it dearly. Not surprising whatsoever. What is the beauty of trading S&P versus trading oil to me personally? You can trade exponential lot size. Billions of dollars traded on S&P, only hundreds of thousands of dollars are traded on oil. Today you start with one lot, you learn the rules, you double your demo, you migrate to live account, continue being profitable, you can add one lot per month. At the end of the year you're trading 10 lots. At the end of the 2 years you're trading 24. Why do you need to trade anything else? Steve Cohen built his multi-billion-dollar fortune starting trading S&P literally in diapers. You have absolutely exponential potential if you are a profitable trader. This is not something you can do with low liquidity instrument. How did we know to expect selling pressure on S&P at that level? We knew extremely well. Exact same level where oil found buyers. Exact same level where S&P found sellers, as we knew it would. Exact same level where S&P monthly gave you last buying opportunity in the month of October. Clear? Exact same level where S&P found selling pressure on hourly. And guess what? Exact same level where you had opportunity to buy Amazon from on weekly, confirming that price moves in exact same sequence. Don't matter what you trade. If you trade Amazon weekly, or if you trade S&P 5000 or oil monthly, once you learn the method, it's up to you what you trade. Just know Fibonacci levels and recognize nothing in this world is random. Everything preset and priced far in advance. 3 marvelous trades. Happy Monday, everybody. Decision point 2 respected on this trade on oil. How did we know it will? Crucial target. Absolutely essential to respect. Remember what happened on S&P. Come on, oil, you can do better than decision point 2. Go down, baby. Hit reversal zone. We discussed 53.20 is crucial. Absolutely crucial. Pay attention. This is reversal zone on our hourly chart, where second time around we took short on oil. Here it is, reversal zone 53.20. Very crucial target. Your trail 53.39. Happy Monday. 4 trades. We've been open barely an hour. Anybody wants to trade with indicators? This is reminder. Price is magic. And no, target is random. Play by the rules. Respect reversal zone. Adore decision point 2. Especially if you trade S&P. Don't ever buy into reversal zone. Only short from. Know the rule that has no number? Know what barometer is? One of our key charts. Don't ever trade against this. And remember, nothing in life and trading is possible if you break the rules. Every time come to trading with very joyful and happy association if you believe in what you trade. If you don't, if you're trading something that doesn't produce results, recognize indicators are just another addiction. It's just like smoking a cigarette or eating donuts. Let it go. have happy association with price and Fibonacci, and you can trade any instrument and any time frame. We knew that 53.20 on oil will be key level. If oil blasts through that level, the collapse will be quite lovely. But this is first reversal zone. And that creates quite a pickle for oil, just like reversal zone to the upside on hourly. Just like reversal zone to the downside on monthly. Know your levels. Know where to take profits off the table and what not to short into. Short from 106 on monthly using exact same rule on monthly chart as I'm using on non-time based charts. Only you know what time frame and what instrument appropriate for you to trade. Clear? Oil continues its collapse. This is where we are on the larger time frame expansion. Okay, if you're in the course, you know how crucial 53 number is. 53 number is very, very important. That number is broken, oil is heading to 52.82 and further. On my very small chart that has no time attached to it, oil blasted through all levels. I went into the wave expansion. So again, we knew not to buy oil anywhere near here. We knew and witnessed brutal fight on oil at 53.20. I said if 53.20 is broken, the collapse will be quite lovely. If you know anything about oil and you're trading oil, you know the importance of 53 number. So again, that's why I find trading very spiritual. This is picture perfect reminder. Nothing in this world is random. Know the rules, respect Fibonacci levels, and you will know how essential it is to never ever ever acquire position into reversal zone, and how essential it is to respect Fibonacci levels for your targets. So, let's take a look at what we are seeing on other stocks. And I worked with a couple of stock traders on Friday and Saturday. So again, what are we witnessing on RIG? As I spelled out, RIG weekly chart came to reversal zone. Your ideal buy on RIG 15, your stop 14. Clear? What is the problem buying RIG currently? 20 is not far off. Again, I have no idea what RIG is doing today. Why? Because it's a reversal zone. If RIG is blasting through reversal zone, the rally will pick up this steam, but expect a pullback at this level. What do we know about trend and structure on RIG? We know that to the upside if 20 is broken, next level 2077, 3 and 30. That would be the key. But if you know my method, you'll be buying RIG at 15. On Amazon, rally continues until at least 400, but long at 286. We stop at 284, reminding you, as you witnessed on S&P and oil, when oil struggled immensely and S&P respected it as two targets, decision point 2. Note the Fibonacci levels. And this is one of my favorite screens of all time, reminding you where Amazon collapsed from last year. Reversal zone. The same level where we shorted oil from. Confirming price moves in exact same way, time and time again. And if you know the rules in Alpha Wave Trader method, you can trade any instrument at any time frame. And if you know the rules in Alpha Wave Trader method, you know extremely well the collapse on euro is not over. Euro is heading to 1000. That would be only the end of the minor trend. Exact same level where S&P been finding buyers. And if euro will blast through this level, it's heading to 78 and all the way to 48. That's why I can't get enough of Forex nowadays. And here is pound. That's where pound is heading to. 33.07 will be the end of the minor trend. Next level, 120 and all the way to 1000. Look forward to seeing you on St. Bart's. 5. Trade number 3 on S&P, again positive. Take 2 points off, move your stop to break even. Anybody wants to use any indicators? How magical is price? I can't get enough. That's why I love what I do. That's why I'm extremely proud of what I developed. And each and every strategy I develop, I keep pinching myself. Can it get any better? And again, dream you would have been buying S&P at 2042 and a quarter with stop at 2042. I wanna cry. But let's focus on what's in front of us. This is all you ever need. Trade right out of the manual. Reversal zone is in. Shocker. Sellers are here. No, I don't think so. I think it's very temporary. I think the bullish rally will go on. Just simply respect this level. The same exact level where oil hourly is struggling, reminding you, don't ever buy into it. You're buying at drastically lower levels. Make sense? It's all the same formula. Is it surprising that S&P finds selling pressure at reversal zone? Not at all, whatsoever. Ever. That's why I named this crucial Fibonacci level reversal zone. Expect selling pressure and move your stop to break even. Exact same formula, exact same trade on oil monthly. Found reversal zone. That's why we've been seeing these bullish rallies on oil. But it's only reversal zone 1. We know what to pay attention to on oil. Most crucial oil months since 2011. Price spelled out in 2011. Where the short trend will end. And that's what I teach in Fibonacci classes. Let's update. 3 more trades this morning already, correct? 13 trades, only 1 negative trade this month on S&P. That trade number 1 was pretty darn aggressive. 12 trades made it to our targets. Clear? 10 trades made it to decision point 2. That's what I teach you. Why in the world do you want to trade anything else? Respect decision point 2 on S&P and the sky's the limit. Play by the rules. How many levels, how many targets had been reached reversal zone? Out of 3 trades, 2, correct, will make it 8 trades that made it to reversal zone. This is the trade where S&P is currently. We've done 2 trades on oil. Clear? First trade made it to reversal zone, second trade decision point 2, which would make 19 trades. Out of 19 trades, it would give us 17 positive trades, correct? Fifteen trades made it to decision point 2, and 1 trade made it to reversal zone. Clear? So let's pay attention to this trade on S&P. Adjust your trail even closer to 2044 and a quarter. We're expecting much more on this trade on S&P than just reversal zone 1, because we know larger time frames are very bullish. But one step at a time. Next level 2047 and a quarter. Remember, just like we went into larger wave expansion on oil, we may see this on S&P. Next level 2047 and a quarter. After that 2048 and a quarter. That is broken. S&P will fly further up, but one step at a time. So here we go. We're seeing selling pressure on S&P from reversal zone 2. 3. The moment of truth. Here is S&P. 4 points later. Can it blast through this level? Yes or no? We have very high hope on S&P. The moment of truth. Going into a larger wave expansion. Here is hourly levels to the upside. 2049. Next level 2052.75. Incredible fight on S&P hourly as we knew it would. Remember decision point 2. Know your levels, and S&P respects this level dearly. Next level 2052.75. Very, very important level on S&P. 5 points later, we're out of this trade. And here's picture perfect reminder as I spell out to you ongoingly. I ain't buying oil into reversal zone. We just took a negative trade on oil. As I spelled out when I took a trade, we still remain in reversal zone. We're seeing very hesitant moves. It's extremely aggressive zone because we're buying very, very close. So, and here's a short structure to the downside on oil. Buyers are being found at 52.90. Not surprising. Let's see what price will do. Again, buying close to reversal zone, extremely